First and foremost, our share price is at a significant discount to NAV, and over half our share price, and today the price is around 37p a share, is held in cash. We have about 20 odd million pounds worth of cash on the balance sheet. That sets us up fantastically to take advantage of buying opportunities. And that 20 million, by the way, translates into more like 200 or 300 million pounds worth of buying power, because alongside it we will raise equity from our clients, and then we will also raise debt from banks. So the buying power that cash gives us is vast. And as this pandemic plays out, we will use that buying power to pick up bargains in the market. The other thing that's crucial to know is that the assets that we do own and manage, we've got about 567 million under management, are all performing well. We've got an over 90% collection rate across the portfolio, and more importantly, we've invested in assets which have actually done pretty well in the pandemic. Around 60% of our portfolio is offices, but offices principally that could be converted to residential. Whenever we buy an office, we're always looking for alternative uses. So those offices that we've got are pretty secure, and then the other 40% comprises largely retail, but the largest proportion of the retail is in supermarkets and retail warehousing. Again, both sectors that have been least affected by the pandemic. In fact, supermarkets have done well during the course of this pandemic. So when you buy shares in First Property Group, you're buying shares at a discount to our value. You're buying into a portfolio of properties that have stood the test of the pandemic and come through it well, and you're buying into a company that's well capitalized and can take advantages of opportunities as they arise, which they will in 2021. We've been investing in Poland since 2005 and have had a fantastic run ever since then. Poland really has been a sort of picture poster child of Europe since it joined the European Union. It didn't go into recession in 2008, and in the latest pandemic crisis it's actually had a very shallow recession by comparison to other EU countries. And by the EU's own measurement, Poland will be back to pre-pandemic GDP levels by the middle of 2021. That's way ahead of any other European Union member state.